Hi everybody, this is a quick Tesla trading update. It's Tuesday, July 29, pre-market. Tesla is currently trading at $327 per share. What you see in front of you is a quantitative and qualitative summary of the last 15 trading sessions or 16 trading sessions. Yesterday, Monday, the stock performed very well, up 3%. You can see down here. Even though the S&P 500 and the tech index, the Nasdaq, were basically flat. This was driven by two positive news flow items. Number one, US and Europe agreed on a trade deal. It's a positive for Tesla because Tesla sells some products that are being imported from the US to Europe and that are being tariffed. Those tariffs should go away. But I think the much bigger one was that Tesla signed a $16.5 billion chip manufacturing deal with Samsung for the AI6 hardware. So AI6 is an inferencing chip used in every Tesla vehicle and will also be used in Optimus. The upcoming AI5 hardware is made by TSMC. I think the reason why the stock traded up on this news was it expressed in a hard number Tesla's confidence in AI product. You don't sign a almost $17 billion chip deal unless you have a very high expectation for very strong volume growth that will absorb that massive amount of chips. The net result was that this stock closed yesterday at $326, up 3% as I said, but on modestly high volume. Only 36 billion stock was traded. For this type of news, that's actually on the lower end for such days. So that's something to keep in mind. The principle always is that when a stock trades up on weak volume, it's often a sign it's not going to hold that level. And the opposite is true. If there's very strong volume that lifts the stock to a new level, it often signals that the stock has reached a new trading level. And this almost always holds true if you adjust for events that were exposed to additional news events. For example, if the stock goes up by a lot because there was huge volume and then quickly drops, you need to check whether there was further news that caused an unwind of the sentiment increase. If you go through this exercise and you study stocks, you will see that high volume days that lifted a stock that were followed by a lack of positive or negative news typically maintained that new higher trading level. So the key takeaway, I think, is that the drop that we saw right after earnings last week was almost neutralized by this combination of good news. Because when we look down here on Wednesday, this was the last closing price, because Wednesday in aftermarket, Tesla disclosed numbers, and then there was the earnings call. Tesla closed at $333 per share. Then on the following session on Thursday, stock dropped as low as 300, moved up to 310, and then closed at 305. So there was an 8.2% down move on relatively, not super high, but relatively high 48 billion in trading volume. But then stock quickly recovered the following day. Not fully, recovered 3.5%. On a day there was broadly no material news. This is something you frequently see in Tesla. There's a very hard sell-off, and next day there's a recovery, a partial recovery. But then over the weekend there were a bunch of good news, and the stock came back. Just real quick, in case you missed it, why did the stock sell off hard after earnings report? It was actually not because of the numbers, because right after market close, Tesla released the numbers. The numbers came in perfectly in line with market expectation. There was barely any reaction visible in the stock price in aftermarket trading. And that lasted until the call started. And then during the call, stock started already to sell off on certain management commentary. The two pieces that stood out there are others, but these two summarized it, I think, best. Elon was warning that the next few quarters could be, I quote, rough. And the second one that likely caused most of the, let's call it disappointment amongst investors, was that Elon confirmed that the upcoming lower cost vehicle that launched last year in April, a massive rally, the announcement of which is a Model Y variant. I think a lot of people hoped to see a compact Tesla for the first time, and both together Elon's somewhat unexciting outlook for the next few quarters and disappointment about the new vehicle launch caused the sell-off. But as I said many times before, I think at this point investors should not obsess too much about the auto business, because all the upside lies in AI products and effects driven by AI products. And I recently covered this in my deep dive Tesla video. So let's take a quick look how my prediction did for the earnings call. So I shared on July 18th this long analysis in which I said, next Wednesday, my expectation is that any disappointment within a reasonable margin around earnings, consensus, and my earnings, lower cost vehicle launch, loss of credit sales will take second place to news about real world AI product news, blah, blah. I talked about how the stock has significant support around the $300 mark. And when we jump back to what happened, so the low on the Thursday after everything was released was exactly $300. So my forecast nailed it. I did predict that this earnings call would be quite neutral, absent material negative news. So where I was wrong was that management would talk so openly about bad quarters ahead, because previously they didn't, even though it was clear. So I didn't have this on my bingo card, so I will rectify this error in the future. And that's why I did not predict the significant sell-off. Also, I did not predict that Elon would confirm that it's a Model Y variant. I did expect it to be a Model Y variant at this point because we had enough leaks, etc. But I did not expect that he would just straight up confirm it. And the fact that on the call he interrupted another executive who tried to avoid the topic shows that if Elon hadn't been there, they would actually have not disclosed the fact that it's a Model Y variant. So anyways, so big picture, I think because of the, let's call it muted earnings outlook, I think the stock is for the rest of the year range bound unless there's some material positive news that nobody has on the radar right now. But excluding that, I don't think that the stock will touch $400 per share this year. But think that as we move into 2026, stock has material upside potential. And just here, quick trading volume analysis. So this is in dollar. So the dark blue line shows you the daily dollar value traded. So the spike that you see here, just under 49 billion, that was the post-earnings day, trading day, so it was Thursday. Then it dropped, and on Monday, yesterday, we had 36 billion, still elevated. Again, this was due to the chip deal announcement. But you can see just prior to the spike, volume dropped to a quite low level. Here you have the numbers. So just prior to the call, it was like what I would call always the calm before the storm, just around 25 billion. This just shows you that investors position for the earnings call several sessions ahead. So before we finish, let's look at this long-term weekly summary. You can see that the stock is now basically flat for since the end of June. To be specific, the week ending, I'm sorry, not the end of June, the middle of June, since this date always shows you the end of the week, and in that week, Tesla closed roundabout where it is right now. And I think this is no coincidence. That late in the quarter, via global deliveries tracking, it is possible to fairly accurately predict Tesla's earnings. So that's why the numbers were baked in from that point. And since the numbers then, the ultimately reported numbers came in line, there was no significant deviation from that value that we already achieved mid-June. And the short-lived sell-off we saw was just on the typical sell the news. And in this case, a second quarter call, it was about the poor outlook for the next few quarters and a disappointment about the lower cost vehicle, as I said. Please let me know in the comments whether these videos are helpful or whether you prefer more a written version of this analysis. Thanks, see you in the next one. Bye.